In today's session, we're going to be talking about bridging finance and how you can use this. And we're going to be looking at the pros and the cons, and more importantly, the pitfalls, what you should be looking out for. As you may be aware, this is sponsored by the Property Investor app, which is the UK's first property investment platform, which showcases property deals all over the UK. Whether you're looking for your next below market value deal, your rent-to-rent deal, that lease option deal, we've got them all on there. There are two ways to get involved. You can either go to our website, which is propertyinvestораpp.co.uk, or if you've got a smartphone, go to the App Store, type in Property Investor and download it from there. So let's get started and straight into it. Before we do so, I just want to say a quick hello and thank you to all listeners and subscribers all around the world. Hopefully you're really enjoying it, and I really hope that you're going to take away something from today's session too. So I got emailed in a request from one of the listeners, a young gentleman to the name of Sam, and he said, "Hi Arsh." He goes, "I was wondering if you could do the process of bridging financing, get into the weeds of it." He goes on to say, "I know that you've done it many times over the years, and it would be great to know and get a bit of support as I finally found a deal where I think I can do this." Well, first of all, Sam, great question. And what I'm going to try and do is highlight everything that I kind of know about bridging finance. Let's start with what bridging finance is for those that don't know. So a bridging finance or bridging loan is what I would consider a short-term loan, which is designed to bridge a period between two situations, usually the purchase of property and the sale of another, or it could be a purchase of one whilst you're refinancing the property, and I'll go through that in scenario. Now, what it comes from is that I've used bridging finance loads of times, and bridging finance actually has its space in the marketplace, within the property marketplace. And the reason why I say that is because we can utilize bridging finance where traditional lenders like Shawbrook, Lloyds, Aldermore and lots of other mortgage lenders out there cannot do it within the time frame, or they may not be able to lend on the property. I'm going to give you a few examples. So example number one, you're purchasing a property off an estate agent, and that property may need some renovation. So it may have some damp, it may not have a kitchen, it may not have a bathroom, it may not be fully habitable in its current condition. So your options in that scenario is A, you either purchase it for cash, B, you use bridging finance, or you could say C, that you pass up on the property. But let's stick with A and B. Now, if you utilize A, cash, that means that you're going to run out of cash very quickly if you've got multiple projects on the go. And also, it may not be the best use of your capital and give you the best return on investment. So therefore, that's why you potentially look at the power of leveraging and utilize bridging finance. Now, there are lots of bridging finance companies out there. I don't mind sharing that I kind of use Together, which used to be Auction Finance. Now they're called Together Money. And I've been using these guys for a number of years, got to be over 10 years. And what I like about these guys is that I can call my relationship broker and I say to him, and his name's Scott, I say, "Hi Scott, I've got a property, I'm currently looking at it. The purchase price, let's just say, is 100,000. I'm intending on either convert it into a HMO, or I'm intending to, renovate it back into a house. And my exit is I'm either going to refinance it and keep it as part of my portfolio, or I'm going to sell it on the open market for a capital gain." And the reason why I'm very clear with what I do with the broker is because they need to know how they're going to get repaid. That is rule number one. The broker needs to know, because bridging finance is a short-term loan. It's not there for 25 years like normal mortgage lenders. They're there for generally, 6, 12, 18 or 24 months. It's rare that a bridger will go past 24 months because it is a short-term solution and it can be deemed as expensive finance. We'll get on to the rates shortly. So going back to my conversation with the broker, he then says, "Okay, I understand the property, so I need the property address. I need some kind of photos or any comparable or any evidence that you got for it right now." So I generally send them an email with all the information. If it's on Rightmove or Zoopla, I send them the Rightmove or Zoopla link so that they can assess the property. Now, with bridging finance, it's good because sometimes they may not need a valuation. They can work off the data that they've been presented, or they can do what they call a desktop valuation. So they can look at everything that they've got at their disposal, and off the back of that, they can come back and say, "Okay, Arsh, yes, we understand that the property today is worth 100 grand. We see what you're trying to do. You want to uplift the value, and we can see that the end value is 150,000. Based on that alone, and let's keep it very simple, they will lend on average around 70% loan to purchase. So it's not loan to value, it's not against the enhanced value, it's against the purchase price. So if you're purchasing the property at £100,000, you're going to get 70% of that. Some may go go up to 75. Some may even go up to 80, but I'm being very conservative here and saying 70% loan to purchase, which means they're going to lend me around £70,000 for that transaction. Now, something to bear in mind is that when it comes to rates, bridging finance, again, I'm going to use the average, is around 1% of the loan amount. So if I've borrowed £70,000, 1% of that is approximately £700 a month. Now, just in comparison, if I was to go to a normal mortgage lender like Shawbrook, if the property was, if I didn't need it quickly or I can wait and the property's in a lendable condition, that normal mortgage would be on average around £300 per month. So you can see the difference. So over a year, if to a mortgage lender, normal mortgage lender, it would be around £3,600. To a bridging company, that's £8,400. Now, the reason why they charge so, not excessively, but higher rates is because they're only a short-term lender. So they've got a limited time where they can make that growth in their income. Whereas with the normal mortgage lender, they've got 25 years. So you can see why they charge. And more importantly, they're there to serve a purpose. It's a short-term loan to allow you to purchase it within a time frame and also get it income generating or get it, modernized and operational and back up on for sale, where other lenders would not have potentially looked at. Now, one of the great things with bridging loans is that you can use them, and predominantly lots of people use them for auction purchases. So if you're seeing a property at auction and you don't want to put all your cash into it, and your bank or your normal mortgage lender won't be able to complete within 28 days. So when you buy a property at auction, you've all seen the programs like Homes Under the Hammer, that you have to exchange on that day and complete within 28 days thereafter. Now, you've got to make sure that you complete within 28 days. Otherwise, you stand a chance of losing the property and also losing your deposit, the 10% that you paid on the day. So you need to make sure that you've got a bridging lender ready in place, and you can do a lot of work before you even go to the auction. So you can speak to your broker and say, guys, I'm bidding on this. The guide is this. I think I'm going to bid up to X. So let's just imagine the guide is £50,000 to £60,000. You're thinking that you're going to bid up to £80,000. Now, you can say to your bridging broker and say, guys, okay, I'm looking at this property. I'm going to go up to £80,000. Work your figures on a worst case scenario, £80,000. And based off that, we can work backwards if we get it cheaper, or we can base it on slightly more if I tend to go over my bidding price. And believe it or not, bridging lenders are very familiar with this. This is what they do day in, day out. They understand that sometimes you may get carried away and you may bid a little bit more than the £80,000 that you envisaged. And that's what happens. So they're very flexible in their approach. So moving on, why else would I use them? So let's quickly recap. It can be completed quickly. It can be used on properties which are uninhabitable. It can be used against properties which have structural issues. And I've also used it recently on a property which has a short lease. So there's a property that had a short lease. It had less than 60 years. Now, my intention was that I'm going to purchase it with a bridge. I'm going to extend the lease within a period of 3 to 6 months. I'm then going to sell the property back on the open market with its new lease, which means that I've enhanced the value, I've created the uplift, and I'm now going to make a capital gain. Now, what normally happens after this is that, let's use this as an example because this is quite a good one. Because when I've increased the value and I now put it up on the open market, if I sell the property, I can then potentially on completion pay back the bridging company like you would with a normal mortgage company, and then you keep the remainder. If you decide to keep the property for your own portfolio and you want to refinance, what would normally happen is that you would extend the lease, or you'd create it into HMO, do whatever you need to do. You get it into a habitable state, get it into a mortgageable state, and then you kickstart the refinance process. So generally, the rule is that you can't refinance until you've owned the property for 6 months or more. So come month 5 or come month 4, you should be speaking to your mortgage broker, your normal mortgage broker, and say to them, guys, I'm looking to refinance this. I purchased it for X. I've now done this work, this work, and this work, and this is why I believe I've now uplifted the value to what I believe is Y. So giving you an example, if I purchased it for 100,000, I've now done some works to it. I've now increased the value to say 150,000. My intention would be that I would now go to a lender like Shawbrook or Aldermore, Keystone, whoever may be in the marketplace right now, and refinance against the new market value of £150,000. Now, why am I doing this? I'm doing this because I'm looking to leverage against the new market value, and as a result, be able to pull all my money, or a large majority of my money, out of the deal. And this is what property investors do all over the country. And this is how people are able to scale their property portfolios, because they're not leaving as much money into the deal as someone would by leaving a 25% deposit in. Now, obviously, the key here is that you've got to buy the property well, and as a result, you've got to make sure that all the figures stack, which then comes to one of the negatives of bridging finance. Now, we've talked about pros. The pros are that it's quick. Another pro is got competitive rates. It can help in diverse situations, but one of the negatives is that it has high interest rates and it has lots of fees. So we talked about the interest rates is around 1 to 1.5% a month, which, in comparison, if you work on that, if 1% a month is 12% a year, or 1.5% is 18% a year, whereas the normal mortgage is around, at the moment, around 5% per year. Now, with fees, they do charge fees to get in and out of the deal. With a bridging loan, they may charge you one payment in and one payment out. Now, each bridging company varies, so it's definitely worth, when you're inquiring about a bridging loan, to understand the fee structure. So what are they charging you for this facility? Are they charging you one payment in? Or are they charging you one payment out? Now, I've got a good relationship with my broker now where they don't charge me any entry or exit fees because I've been using them for a long time, but this will come with experience. More importantly, my rates are no longer 1 or 1.5%. We're now looking roughly around 0.6%. So I've brought them down massively to where we were. So 0.6% is on average around 7% a year. Now, if you think that the average mortgage is around 5% right now, we're not a million miles off, but it's still slightly higher. Now, just bear in mind that bridging loans are short term, 24 months maximum. If you go over the 24 months, this is where it gets really expensive and really uncomfortable. The reason why I say that is because they will then start to put you on APR rates of like 17 to 19%, and it becomes really painful. More importantly, they don't want to be a long-term lender. They will work with you, but it's going to cost you. There's going to be penalties involved, and if you can't show a way that you're going to be able to repay them, and this is why it's always good to have your exit in mind. Remember, when you speak to your broker, you're going to tell them what your exit is. When you're speaking to your bridging broker at the start, make sure that you've got a product to go in, so you've got the bridging finance to go in, and also potentially that you've got the finance to come out. So this is why you speak to your mortgage broker, say, guys, I'm using bridging to go in, I want to get out on a mortgage, what can you do? And ideally, the same broker should be able to do both. The same broker should be able to arrange your bridging and also your mortgage to get out. So when you go into a property deal, not only just think of short term, just don't think I'm going to buy it. You got to think, how do I get in? How do I get out? How do I enter? How do I exit? And this is, if you get your figures wrong and you struggle on the refinance, you've got to have a plan B. So if you were expecting it to, let's just say you purchased it for 100,000, they've lent you 70 grand. Now, based on the fact that you've now come to refinance it and it's not valued up in accordance, you've got to make sure that you're going to have the ability to pay that 70 grand back to the bridging company, because if not, that's where it becomes very expensive, and over time it will become unviable for you to do that transaction. So remember what I said, learn how to get in, but more importantly, make sure you're able to get out, and that is a real key point. And more importantly, make sure that the broker, you've got your decisions in principles or your agreement in principles, so that you can show the bridging lender that yes, here's what I intend to do and here's how I intend to get out. And this will create confidence all round. More importantly, from your point of view, it'll make sure that you kind of understand all the figures and you know where you're going with this as well. So what else is there that I need to cover on? I think I've covered the main pitfalls of bridging finance, and where we talked about the rates and we talked about the timeframes. The one thing I will say, I've talked about timings, I've talked about valuations. You've got to make sure that your valuations are on point. And again, you can do this by speaking to agents in that location and making sure that they provide you with some confidence to show you that everything's all working according to what you envisaged with the property. So there we have it, guys. Sam, I want to kind of direct this one at you. Hopefully that's kind of answered your question. So think of it as short-term pain but long-term gain. That's what I think of it. As I said at the start, bridging finance has its place in the marketplace. It's really good if you use it right, and it's a great method of finance to fund those properties that other lenders won't touch. So use it right, make sure that you start to use the facility correctly, and as a result, you'll be able to win all round. Hopefully you've enjoyed that. Hopefully you've taken away lots of key nuggets and golden tips from there. As always, as I said at the start, is sponsored by the Property Investor app, which is the UK's first property investment platform, which showcases showcases all kinds of deals all over the UK. Whether you're looking for that below market value deal, that rent-to-rent deal, that lease option deal, we've got them all there. Now go and check us out. There are two ways to get involved. You can either go to the website, which is propertyinvestorapp.co.uk, or if you've got a smartphone, go to the App Store, type in Property Investor and download it from there. Don't forget to subscribe and like the channel. And finally, if you want to be social, want to connect with me on social media, please feel free to reach out. Send me a message on social media. So you can find me on Facebook, LinkedIn, Instagram, Twitter, Clubhouse and TikTok, all under the handle of Arsh. So guys, hopefully you've enjoyed the session, slightly longer than normal. Hopefully you've taken away lots of tips and I look forward to speaking to you all very soon. Take care and bye-bye.